The where we are is technically we're halfway through. We're halfway through because release 2 of the full release roadmap went live in September of this year. Release 1 went live in January of this year, and as I think I said earlier, that was our MVP, the minimum viable product. It showed that what we created, covering 90% of the UK market, worked. It was safe, and it was secure, and it worked. And the customer journey was horrendous. I wouldn't put anyone I know through it. And yet people were still using it, which is phenomenal. And one of the things we realized is that whilst we can spend a lot of time on the technical architecture, actually, in order to get the banks to create a customer journey that worked, I needed to bring in some standards as to how they could run their user experience. Those were published in September of this year. 300 to 400 pages worth of screenshot by screenshot with the wireframe diagrams explaining exactly how the banks should interact with the institute. And in some cases, we'll bring, one of my banks has 16 screens to do one consent down to 2. An average journey of maybe 3.5 minutes down to approximately 15 seconds. That goes live, and I have full commitment to do this, and the strength of the CMA's order behind us to insist on it in March of next year. Now, it's not going to be without its teething problems, but in March of next year, effectively, I see that then as a combination of the technical capability of open banking plus the user experience. You need both those two things together. It's a combination of those two items that I think makes 2019 the year for open banking. We've got over 200 FinTechs in our pipeline in the open banking ecosystem that we're managing through. Approximately 50 or so, it's a little bit more, have got authorization from the FCA. Over the course of 2019, the remainder will. And that's really what we're going to try and pull through and make this work into a great proposition for consumers and also a vibrant, kind of innovative economy. Already the banks are beginning to react, which is a good thing, right? Because it shows that it's actually working. They've gone from that period of being in denial, and now they're in the period of actually saying, oh my goodness, we need to do something about this. So those of you who are eagle-eyed will have noticed that Barclays, in one of the major papers just a couple of days ago, if not yesterday, big full-page ad on how in the Barclays app you can now aggregate your non-Barclays bank accounts. This is phenomenal. You know, this is like Pepsi and Cola. It's like being able to have a can of Coca-Cola, and drinking the Pepsi out of it. It's you know, from those guys competing with each other on a basis like this is just phenomenal. And of course, that we all know aggregator is a pretty basic use case for open banking. There's tons of things that we can do beyond that. But the benefit of someone like Barclays doing it, that they will then put this in front of 6.5 million customers. And to be completely honest, a customer is more likely to trust Barclays the first time it uses open banking than it is a FinTech. So this is powerful for adoption.